All right, welcome everybody. Thanks for joining us. Been a couple of months here, but we're recording. So again, just so others who couldn't make it can tune in, which I've heard from a number of people almost every time I send one of these out that they appreciate the recording. So I appreciate everybody agreeing to be recorded. Hey, Dan.
Hey, good morning.
Morning. We're just getting started. So Helen teased that she has a good story for us. So that's always let's start there. What do you got for us, Helen?
Well, I was flipping through some LinkedIn, looking for some links to some podcasts, and I came across one that was an AI generated Warren Buffett advertising his investment philosophy.
Okay, nice. You have a link? I'd love to see it. That should
I
be
think
good.
it's on LinkedIn somewhere. I'm sure it'll
Okay.
start cropping up, but you could tell the voice was like it had the raspiness to it, and I was listening to it. And I'm going, this isn't real, and it sounded like 20 years ago or something like that. His voice 20 years ago. It just cracked me up.
Oh, that's funny. I know. I see these. I see posts and things. So-called quotes of Warren Buffett. That you clearly. I mean, at least for us, who've even been following for a little while. That it's nothing he would say. It's more like personal finance stuff, and people just kind of attribute them to him. But uh, that's funny. I'm sure there's going to be more of that. Welcome, Andrew.
Good to be here.
Oh, that's funny. So, yeah, what do we want to start? So, I usually have spend a couple of minutes just uh, on the most recent issue. So, if we want to start there, just as sort of a means to kick things off. Creightons, anybody interested in Creightons? Follow Creightons? If not, we can move on. But always like to start
I
there.
just want to know what the heck happened. Because it sounded like a disaster.
Yeah, it's definitely not the same company that it was a year and a half ago. I still don't know what happened to Bernard Johnson. I don't know if he was sick. I mean, I search him every now and then on LinkedIn or on the internet and try to find out if he jumped ship and landed somewhere. I have no idea. Um, and as I think I said in the post, Pippa Clark, this is definitely one of those situations where management, I mean, management is key. It's such a small company, but without Pippa Clark, I don't think I could hold this thing. And there's a number of people that are still there. This guy, Martin Stevens, Forster is still there. So there's enough good, and they definitely got hit with a recession in the UK, and they're small enough that just a UK type of acute hit would affect them. Because if you look at like a L'Oreal or some of the other big ones, they don't quite show the same negative drop as Creightons, but Creightons has that acute exposure to the UK. But I still like the business. It's definitely one of these companies, and full disclosure, I still own it. But they definitely have a little bit of work to get out of this, but they're still profitable, and I think they still have some upside. But it's definitely not. Bernard Johnson said that they could be at 100 million in sales, in a couple of years, and clearly that's not going to happen. But I think they still have the potential to get there. And the only thing I disagree with them about is the dividend. They just have this philosophy of let's return cash via dividends. I'd rather than buy stock, but that's my only quibble. So, anybody else have any thoughts on Creightons?
I think it definitely looks cheap to your point. The question ultimately is what they do with the cash that they earn, right? Do they pay dividends? I mean, I'm just looking at it kind of high level right now, and they're generating plenty of cash. It's just what they do with it. It seems like is going to be the driver here. So it is management ultimately. It seems it's going to be the big question mark.
Yeah, and it's one of these businesses where it's almost like retail, and I don't know if Andrew Wagner, if you have any thoughts, but it's so you have to really be sort of up on trends. I mean, Pippa Clark is, she was the marketing person. That's her DNA. So they cut a bunch of SKUs, kind of realizing some of their mistakes, but they're constantly having to, you know, uh, bob and weave and integrate the latest trends like SPF and things like that. So um, just there's some parallels to retail, I think, which gets kind of outside of my comfort zone. I like them just from a sort of manufacturing standpoint, but um, does spur any thoughts for you, Andrew?
Well, the part of the challenge is when you're in this type of business, the smaller you are, the harder it is. It's kind of just the reality for them.
Mm-hmm. Yeah, they're very much. I mean, I like again Martin Stevens. If you watch the annual, I don't know if it's technically annual meeting, but um, just talking about sort of just all these little. You can tell. I mean, you can feel the smallness. They were talking about having the engineers, the people in the manufacturing line, piece together another line based on sort of old equipment that they had there, which it's kind of fun. Like it's just fun owning a small company like that because it really just kind of highlights the everyday nuts and bolts, which are that kind of thing is probably happening at bigger companies too, but you just don't hear about it. L'Oreal and Estee Lauder and all those guys are talking about sort of big trends, big manufacturing. So it's kind of fun. Um, yeah. So again, see where that goes. What gosh, what to talk about? Anything Berkshire related? Anybody wants to talk about? Sort of in the middle of. Go ahead, Helen.
All the sales and all the cash.
Berkshire.
Yeah.
Yeah.
Bank of America, Apple.
Yeah, yeah, and then this sort of curveball, if you will, with Ajit Jain seemingly selling stock. I'm inclined to think it's more of charitable related. I don't know why that wasn't disclosed, but I mean, it would just be he doesn't have a history of selling based on valuation. That would just seem kind of weird. Um, so I kind of, in my mind, this is just sort of roughly weighting. It's like 90%. It's probably something innocuous. Selling it, transferring it for charitable purposes. Maybe a 10% chance that all right, he's hanging up his hat. I don't think that's likely, but um, who knows? I mean, things we're definitely kind of getting into this transitionary period for sure. It's already been happening, but we'll see. We'll see. I'm not too worried either way. Jesse, you have a thought?
Have you weighed any possibilities that Buffett's gearing up to purchase Chubb?
Yeah, I think Chubb's probably too expensive right now. It's certainly a possibility. I don't think so, but I mean, anything can happen. I could be wrong. Um, to me, it seems more of a valuation thing. He talked about selling some Apple in May, kind of tax valuation slash tax reasons. Bank of America, they have exposure to different consumer things, and I'm inclined to think it's more valuation based. I mean, don't forget. I mean, if Berkshire really wanted to buy Chubb or anything big, I mean, they could go out tomorrow and borrow whatever they wanted. I mean that so if I don't think it's raising cash for anything like that. I think if they actually were doing something, they would have done it, use some cash, borrow the rest. I think they did that with they've done it a number of times, but most recently with Precision Cast Parts, borrowed. I think it was like a 12-month note to fund it, and then threw on some permanent financing. Dan?
I was just gonna say, I mean, obviously, I have no idea why he's doing it, but I do remember at the annual meeting he mentioned something about with where the economic environment is and where valuations are, he'd rather have a little more cash. Maybe it was when he was selling Apple, but I always think of that. I think it's his Sun Valley speech that was written into an article. And if you look at those three metrics that he talks about, again, I know he never talks about the general market. I think he talks about interest rates, corporate profits as a percent of GDP, and GDP growth
Mm-hmm.
is kind of the three drivers. And those are all at pretty extreme levels right now. Again, I don't think he's making a timing on market call or anything. I think he just can't find anything that's worthwhile. That would be my guess.
Yeah, and don't forget, Buffett's effective universe is so small. I mean, we're talking probably less than 100 companies, right? So to really move the needle. So it's a different, I think it'd be a mistake to read too much into it.
Yeah.
In terms of, okay, I got to raise a bunch of cash because, Buffett's selling, or, whatever it might be. I think those of us managing, less than $100 billion, which I'm pretty safe to say is probably everybody in this room, is, has a much wider opportunity set than Warren does. So it'll be interesting. I mean, there's something always happens, and I think that's one lesson I've learned over the years is like, my patience level just kind of grows longer and longer, sort of every cycle. And I think I said this last time we met here about MetaFast. If I'm wrong, it's because I just couldn't, sit still and I had to buy something. So we will certainly see. I haven't. Does anybody know off the top of their head what that Buffett ratio is? The market cap to GDP. I haven't. Every now and then I look at it, but I've kind of
Roughly
gotten out of
200%, I want to say 170 to 200, something like that.
200%, which
Yeah,
I think
202.
which I think 99 2000 is when it got up there again.
I have a couple comments to add. The first
Sure.
one is there are actually a few market metrics that are close to 1998, 1999 that I've seen. I don't necessarily think that's as relevant as Buffett's situation specifically, where most of the market returns for the past couple of years have all been in very, very large companies, where small caps, I think some mid caps have been left behind. And for Buffett, he can't really shift his viewpoint into smaller companies in the same way that other investors can. So his only option is to go to treasuries and just wait until he can see that kind of opportunity again. I think historically, he's never focused on what the broader market is doing and just what he can see in front of him. And I would not be surprised if he just felt like what he can see in front of him is not very attractive right now. But that's not necessarily relevant for the rest of us, where, like you said, we have a broader set of opportunities we can look at. And smaller companies generally have not performed as well recently. There may be more opportunities in that area that Buffett would normally be able to see, but it would do nothing for him to invest in any of that stuff.
Mm-hmm. Yeah. Yeah, I think it's usually, I mean, we're so, you read history, you just kind of go back, think about things, and you cover such a wide amount of time, just reading an article, or oh geez, from whatever 99 to 2002, this happened. We're in the day to day, right? So it looks like, okay, lots of cash, what's gonna happen, but fast forward 5 years. I mean, they'll probably have bought back a bunch of stock, maybe made an acquisition, things things just kind of tend to happen over time. I think we're just in one of those moments where we're in the micro, we're in the day to day, lots of uncertainty. But I think it's always like that, right? There's always uncertainty. But I mean, it's a great position to be in because kind of, I mean, it's not a great position in that they don't have. I don't like that the share repurchases have kind of been cut off. I mean, that was the sort of one saving grace is like, all right, we can just buy back our own stock, but I'd be surprised if they bought back, any in the third quarter. So other than maybe, some sales from large blocks of stock or something like that at a slightly discounted rate, but um, something will happen soon enough. It's just trying not to speculate on what that is, or because you can go for a long time without something happening, and it's like, geez, I should have just stayed invested. So yeah, I'm not too worried about it. I don't think. I mean, I the thought crossed my mind that, geez, maybe he's 94, right? I mean, how much? He's certainly one of the most rational people, but is there an element of, okay, he's getting a little bit older, let's be a little bit more conservative. I don't think that quite applies to him. If Charlie was around, he'd probably just say be patient. So but I don't know, we'll see.
I have one thing where I disagree with you there. I don't think he's getting just a little bit older. I think he's getting a lot older.
You think he's aging like
I think
exponentially?
well, I think that the way he looks at things in his 90s is probably a little different than he did in his 60s, maybe.
Yeah. Oh, absolutely. I mean, I wouldn't disagree with you there. Yeah, and I think, I mean, if last year is any indication, and I've said this a couple of years, so I think I'm probably in the, even if I'm right, I'm wrong because I've just been saying it for so long, that I wouldn't be surprised if he just totally hands the reins to Greg Abel next year. Because if any, 2 years ago, it was, thanks for coming, David. 2 years ago, it was a little bit of, okay, Greg's got this. Last year, it was like, nope, that's Greg's area. That's Greg. So it'll be interesting to see kind of how much more he puts on Greg. And Greg's done a good job, really, I think, motivating and shining a light on some of the subsidiaries, the smaller subsidiaries, because their performance was kind of lagging the last 5 years, and he's really 5 or 10 years, and he's kind of really brought those margins back and done some things to free up cash, and so I feel good about it. And I think I don't know where I said this or who I said this to, but we kind of think about this Buffett transition to the next generation, which is Greg Abel, as sort of an event, but it's really a continuous thing. I think it's happening right in front of our eyes, and when he's gone, whatever that looks like, if he steps down or if he dies suddenly like Charlie, it'll feel sudden, but we'll be fine. I don't really think there's any risk at this point, but what companies are you finding, Andrew, or other Andrew, or Jesse, Dan, Helen? Anything interesting on your radars?
I haven't found anything particularly compelling. Of course, I manage it a little bit differently because I'm not looking for one individual or a small. I'm trying to look for rationally priced compounders to put in individual portfolios so they can see what they've got. So that's a little bit different. But I think Andrew and I had this, we both agreed last time, it kind of, the price of the market concerns me. I'm heavier in cash. And I've been hanging on to it for a while for some cash that came in the door, and I can't rationalize putting it to work.
Mm. Yeah, I looked at I just for Saya, the LTL company. I saw one of those trucks this morning, and just amazing that a lot of these companies are still trading at 30 times earnings. I mean, I know interest rates have come down, the last week or so, but um, it's just kind of amazing that things are so highly priced still. Um, Again, there's pockets where I think there's maybe some value, but I don't know. Helen?
One of the things that has thrown me off has been when interest rates rose, you would expect some sort of pullback, albeit minor, maybe 10, 20% pullback in stocks, and you never got that. They just blew through that. And so there really hasn't been any, you would expect political uncertainty. Okay, maybe there's a pullback in here. And the market, is the economy all that strong underneath to keep carrying through all this? That's been part of what I've been wrestling with.
Yeah, I don't look at macro factors as sort of a way to drive decision making, but just in terms of getting the feel for sort of the temperature of what's going on. Like you said, interest rates higher than higher than zero, but even just more recently, credit card, auto delinquencies kind of going up. This so-called pandemic cash dwindling, pandemic savings. It just kind of feels like something needs to happen, and I always think, geez, what's that next big thing, that we should be looking for? And it will probably come out of the blue. I mean, not to mention the geopolitical risks. But I think if history is any judge, I mean, something will happen soon enough, and we'll be back to panic or whatever it is. Andrew, go ahead.
Yeah, I am in a similar boat where I haven't necessarily found any slam dunks, of course, right? Like I think those are pretty far and few between, but trying to take, a similar approach of what you talked about before of just like the watch list, right? Where it's like, you never know when one of these are going to go on sale. So just kind of compiling the research in the meantime, but starting to dip my toe internationally just a little bit, just to kind of push me outside of my comfort zone. So two that I've just been researching are Nintendo and LVMH. And I know, Adam, you said that your retail is something that you stay away from, but I'm curious. There's obviously some parallels between what Bernard Arnault and Warren Buffett have done. Is that ever one that you're kind of interested in at all, or is that one that you just feel like it's outside of the circle of competence?
Yeah, maybe Andrew Wagner can weigh in. I mean, he's the gamer and in retail. But yeah, I just it's kind of a combination of just outside of my circle of competence, sort of kept there by a lack of interest, if you will. It just hasn't really attracted me. Now LVMH owns an alcohol company, don't they?
Mm-hmm. Yeah.
That's a small piece of their business, though, isn't it?
Yeah, I'm actually just starting, so I don't have but yeah, it's I think Hennessy is one.
Okay, yep, that's right. Yeah, and I think Tom Russo owns LVMH, doesn't he? If I'm not mistaken. So I think you're in good company. Yeah, and again, it's kind of one of those things where, yeah, I mean, if it interests you, I looked at Swatch one time, but never pulled the trigger. Maybe 10 years ago, something like that. I think you certainly have the ability for some of these things to go through, some more panic cycles, if you will. I mean, at least my understanding of all of them, just in terms of beauty trends or discretionary spending, kind of all those things. But again, a company like LVMH, I mean, they certainly have earned their reputation. I just don't understand it super deep. But Andrew Wagner, do you have any thoughts on that?
There's a little bit of nuance to both of those companies. When it comes to retail, I don't understand the luxury side of it at all. I don't get it. Whenever I look at retail, I stick to the discounters. At least it's similar to Walmart. Those are a lot easier for me to understand because I can understand how those consumers think. I have a really hard time understanding the luxury brands and how luxury brand consumers think. That's extremely difficult for me. I could probably do the research and figure it out, but that would still be outside of my comfort zone.
Mhm.
So that's my only comment on LVMH. When it comes to Nintendo, I actually know a lot about that industry. It's a cyclical
Mhm.
industry that is right now going through a tough time. And part of that is the hangover from the pandemic. It was a very popular industry during the pandemic. The other part is the cycle is based on when the new group of game consoles are
Yep.
developed. And I know that Nintendo is right on the edge of the next one. I'm not sure exactly when that's going to come out, but historically, that has been a good time to invest in the industry, is right before the next batch of consoles comes out. I'm not sure about Nintendo specifically. In the past, I've avoided them because I generally prefer to be invested in the video game companies that are on the software side and not the hardware side like Nintendo. But Nintendo's brand is, it's a lot like a Disney or a Coca-Cola.
Yeah.
So there's something extra that you get with Nintendo that you don't get with the other game companies. And then, of course, Sony and PlayStation. If you invested in Sony, you're getting a lot of stuff you're not really looking for if you're trying to get in the game industry. The same thing with Microsoft and the Xbox. That is such a small part of the company, you wouldn't make a decision based on that. I personally really like Nintendo as a business. I've never invested in it. I don't know if I ever will invest in it, but this is probably the right time to be looking at it and trying to figure it out, because I know that the shift in that cycle is coming pretty soon, maybe over the next couple of years.
Yeah, I'd be interested to hear. I know Jesse just raised the hand too, but like I know that the Tokyo Stock Exchange, I think, is making some like policy shifts of encouraging buybacks and kind of less, sitting on cash. So that's part of the element too. I was running some of the numbers of like the Switch sold 140 million units. Is that even possible for the successor to sell that many, like historically? Because some of it is you got to price that in. But anyway, curious to what others think about just some of the Japanese stocks in general.
Well, this may be an unfair reputation, but Japanese companies have a reputation for setting money on fire. That's the general description. Setting money on fire. Nintendo has done it too, which is one of the reasons that I have avoided investing in Nintendo. But I love the brand value. I love the things that they do. It's just a little bit of a gamble with every new console. You don't necessarily know how successful it's going to be unless you are very deep into, I guess I want to say, the culture of the gaming industry. You have to be really close to the consumers to know what they're thinking about that. Because Nintendo did extremely well with the Wii. Like, I can't remember if it was the best-selling console ever or close to that. And then the Wii U was such a total bust that the company was in real serious trouble. So it's a great business, but they kind of swing for the fences sometimes in a way that I'm not always comfortable with. That you don't quite get with the software side all the time.
Andrew, what kind of market share do these top companies have, and is it stable? Like, do you see the same kind of dynamics in like a Disney or something like that, where the entertainment?
I think it's pretty stable. Nintendo's kind of the outlier of the game console world, because every time they come out with a new console, they're not trying to be the strongest. They're not trying to have the best graphics or all that stuff. What they're trying to do is have something that's just fresh. And they don't always get that right. But I like that strategy, though. Instead of trying to compete by having the best technology, they're trying to compete by having the most interesting technology and the most fun games. I like Nintendo a lot. And I know that there are some pretty well-known fund managers that consider Nintendo to be their favorite company in the industry.
I've never really gone that deep. Jesse, what do you got for us? A list here.
Yep, I've been pretty busy. But I just want to say I really like hearing Andrew's perspective on Nintendo, the consoles, and the software. It made a lot of sense to me. But first and foremost, I feel like I need to mention that Mainfreight released their annual meeting, the shareholders, on YouTube. And if you haven't got a chance to check it out, I definitely think you should, because to me, it's just another year of excellent management and another example of why they're my favorite company. So nothing's really changed with them. I still really appreciate them. Haven't been purchasing the stock, but perhaps I should be. And another thing is, in recessions, if you believe there is one or not, Mainfreight's always been known to capture market share. And if there is a recession, I don't believe this one would be any different.
Jesse, sorry. Question
Yeah,
on Mainfreight. Are they? And I should watch it and read their stuff, but they were making a foray into the LTL trucking space in North America. Have they pushed that? Do they have any feedback on how that's going? Because I thought that's a tough move.
Yep, they're still disappointed with the results. They're still trucking along, as you will, pun intended, for Australia and New Zealand, but they're still having difficulties in Europe and in America. But I don't think Mainfreight's one to shy away from the challenge, nor will they fail. I also heard that FedEx is, I think you actually said it, sectioning off their business to have the LTL component away from every other part of the business.
Yep.
So I wonder if FedEx is going to put that up for sale, or what they plan on doing with that, and if Mainfreight's actually going to take a whack at it, especially because they've purchased buildings from FedEx before. And I believe Mainfreight's even gone into FedEx buildings and had tours and stuff like that. So I think they talked to FedEx more than I would think anyway. So I don't see it outside of the realm of possibility. Not that it's in my calculations or anything, but still as troubling as it should be, but hopefully we'll see more progress in the future. Yep. So I think that answers your question, right?
Yeah, no, I appreciate that. I should. I need to do my own digging, but since you were just talking about it.
Okay. Another thing I want to talk about is Mr. Beast, famous YouTuber, #1 on every social media, everything, and how it relates to an example of Warren Buffett saying, if there's bad information in a business, you want to get it right, you want to get it fast, and you want to get it done.
Mm-hmm.
And Mr. Beast is getting a lot of slack now, who I consider to be one of the greatest leaders of our time right now. But he's probably made a mistake in that Warren Buffett category, because he's getting a lot of slack right now for not handling employees and employee behaviors and getting information out necessarily. So if you want to study something that Warren Buffett said in the past, I think looking to Mr. Beast and the events going on with him right now is a good case study.
Interesting. I've only seen, some of his crazy videos and all that stuff, but no, I wasn't aware that there was any controversy or hot water or whatever.
Yep. Essentially, like I said, there's things going on with an employee of his, and he wasn't able to get it out fast enough. But he's trying to do his best, but he hasn't responded to it. And in the meantime, he's still launching products and stuff. So his reputation's been hurt a lot. And Warren Buffett, is very keen on keeping his reputation high. So I think it's worth watching to see if Mr. Beast can recover from this, how he recovers from this, and so forth. But he's definitely taken a hit, and it's very interesting to watch.
Knowing that guy, though, I mean, he'll be the definition of, any press is good press, and it'll probably make him more famous.
Yeah, we'll see. Reputation is very, very hard to keep and maintain, and that's what's really interesting to me in this whole debacle, is to try to figure out how sticky is his reputation.
Mm-hmm.
From there, I pulled up the video. I don't usually like to because my face is ugly, but I got the Japanese company handbook I've been going through. I got it because most of the companies in Japan have released their full year statements, and I finally pulled the trigger and bought this book, which is kind of like a dictionary for all those who haven't seen it before. It's got something near 8,000 companies, and I've been going through it one by one. In the chat, I listed 6 companies that I believe have good IRRs of total value creation. I have a value investor friend who's going with me, and he's looked at the companies and doesn't fit the value investor criteria, which is fine. I understand that. But the one so if you guys are interested, you can go ahead and take a look at that. But the one I have a star next to, the asterisk, is 1999, which is SATA Corporation. And I'm actually struggling trying to figure out how I can even purchase that company. It's on the Fukuoka Stock Exchange. And if anybody wants to dive into trying to see if they can figure out how to purchase that security, I would greatly appreciate it, because I'm still struggling with trying to figure out how. And it's actually my favorite one mathematically. The unfortunate part is going through this book, it takes me so much time that I'm struggling between, like, do I do in-depth analysis on a company as I'm going along and I like it, or do I go through all of them, figure out which ones I mathematically like the best, and then do a quality check afterwards? Because it's going to take me like 3 more months, I think, to go through this entire book, and so much can happen in 3 months. So those companies that I list, I could be dropping very quickly, but I'm halfway through the book right now, and I wanted to ask if anyone's ever gone through this book before, or do they know the companies I've listed, and if they know how to trade 1999.
I have not. Reminds me of Buffett buying, that basket of Korean stocks. Where did you get the book, Jesse?
I can drop a link, but it's essentially the Japanese Amazon.
Okay, gotcha. Cool. Is it sort of a setup like a value line?
Yep, it's exactly like each page has size 6 font. There's 4 stocks to every page, and it's 2,080 pages or something like this.
Wow.
Yeah, I've done the same for Value Line. Not as thoroughly. I was actually going through Value Line pretty thoroughly, and I found that the book was the annual report, so I decided to go through these. So I kind of stopped my Value Line one. The person I'm going through it with has done the Value Line all the way through multiple times. So I really appreciate his opinion, and he does a very Buffett-esque style, which helps because I can compare my method versus the Buffett style. I have no macroeconomic outlook for Japan. I just knew that the annual reports were listed, and I decided that I was finally going to purchase the book and go through it one by one.
Nice. Well, thanks for sharing your findings. Anybody else in here look at Japan or own any Japanese stocks? Good for you, Jesse.
The only one I'm really familiar with is Nintendo, and I don't think that really counts because that's just
Yeah.
the the nature of me being interested in that industry.
Dan, anything on your radar these days?
Not Japan. What's interesting, I mean, it's kind of fitting for the Creightons call, but I tend to find things in the UK nowadays. I think the AIM exchange has a lot of stuff. I've just kind of done a screen and went one by one through the AIM. AIM is it's like the smaller exchange in London essentially. And yeah, there's definitely some stuff out there. I mean, to your point earlier, all the metrics feel like the market is high, whether it be, I guess, here or in the UK. But if you're small enough, there's stuff to find, it feels like.
Any good companies that you found regardless of valuation?
Yeah, so one I've been looking at, it's called Dewhurst, Dewhurst. It's pretty small. It's basically a family-owned company. They create elevator buttons, so a pretty niche
Nice.
industry. Yeah,
Nice.
pretty niche industry, and they're just very efficient. I mean, I think in the last 25 years they've grown revenue significantly, and they haven't added a new employee, or they've added like 5 or something. Super efficient company. And what else is interesting is for the last, let's call it 15 years, if you kind of go through their financials, you'll see that they had a pretty large pension liability. And instead of ignoring it, they have been using a lot of cash to get that thing under control, while still, buying companies, repurchasing shares, paying dividends, doing all that. And they finally have it under control. So all that cash that they were using historically to get that thing together can now be used for whatever they want. And they have a bunch of cash on their books too. So close to building, it's the one that I'm most interested in at the moment.
Cool.
And I've never heard of anyone talk about it. So
oh man, that's wow. Elevator buttons. That's like one of those super cool niche.
yeah, it's definitely niche. I mean, the idea is, it's what people see when they go in an elevator. So it's for, high-end places that want to differentiate their elevator and make it look a little nicer, as opposed to having the standard ones. And they partner with all the big manufacturers. I know there's only, 4 or 5 of them, let's say, that are the big manufacturers, and they're involved with all of them. So it's interesting.
Yeah, so it looks like I just quickly pulled it up. 40 million pound
Yeah,
market cap.
it's pretty small. Well, what's interesting too, and I haven't figured this out, but there may be some arbitrage opportunity here, because there's 2 classes of shares and they trade at dramatically different prices, but I mean, it's controlled. So no matter which share you buy, you're not going to be able to get any control anyway. I can understand the argument where you're saying, well, if I have one share class that has more votes, it's worth more. But in this case, it really doesn't matter, because you're not going to be able to get control anyway. So I found that interesting too. I haven't done anything on that front of it, but the 2 share classes are DWHA and DWHT, and I forget the price differences, but they're pretty big.
I mean, weird stuff happens like that. And you look at Heineken and Heineken Holding, which I still don't understand. It seems totally economically backwards that the Heineken Holding Company, which has control, trades at a lower price than the Heineken Company. It doesn't make any sense. It's like a 15% difference. I just don't. I don't
It's
get
strange. I don't get it either. I mean, I can understand the argument if you want to build a position where you gain control, but in certain cases, it's not going to happen either way. So I don't get it.
They have excuse me. Does the family own a lot of the company?
Yeah. So I forget the numbers off the top of my head, but the family owns majority of it, and it's been passed down, through generations. And I think actually the CFO, the son, he's probably late 20s, early 30s. He just got promoted to CFO, so
Okay.
hopefully he'll stick around and let this thing go for a while. Let it ride.
Nice. I might take a peek at it. Yeah, I like, again, simple, right? Like probably not a lot of elevator button manufacturers out there.
And they own a bunch of different companies too. So they have a distributor, like, and what's nice is it's based in the UK, but they have revenue from all over. They have some US companies, Australian companies. It's not, totally reliant on the UK market either, but it's traded there. So it's pretty cheap. At least I think it is.
So do they sell to OEMs like Otis and Stanley, or?
Yeah, they do.
Okay.
So the way it works is, like, let's say some business wants to build a new hotel. They will contract with Otis to kind of get the elevator, but Otis will, I think, give them the option to use Dewhurst buttons. I think it's all kind of packaged as one. They don't need to, like, reach out to Dewhurst separately or anything like that. But then the other pieces, they also do replacement parts and things like that. So,
Mhm.
I mean, it's not just elevator buttons, but what I found interesting, and I'd have to pull it up. Let me see if I can find it. Because you wonder why do these guys do so well? And it's clear that they are very efficient. I mean, they do not waste money. And I also liked that whole pension thing I talked about. Because it's family owned, instead of ignoring it, I mean, they spent a lot of money to get that thing under control, and they finally have. So going forward, they should have all that cash to do what they want. Let's see.
Yeah, it seems it sort of feels like, reminds me of Buffett talked about. I think it was in his pension letter to Catherine Graham. He talks about, I think it was Sears, or maybe it was another company. The assets of the pension dwarfed the company itself. So focusing on the pension, you could actually, from an economic standpoint, help the shareholder just as much as you would by improving the operations of the operating company.
Right. So I was just looking here. It looks like 2006, they had 327 employees. Let's call it 30 million pounds of revenue. Now they're at 338. So they've added 11 employees, and now they're at 60 million pounds. So they've doubled their revenue, kept employees constant. So they definitely try their best to keep costs low.
And that's in, what did you say, from 96 to?
2006 to 2023.
Okay. So
15 years or so.
Yeah. So that's what, like 3.5% growth or something. So it's not it's probably just growing with GDP.
Yeah.
Interesting. Very cool. That's neat. Yeah, that's why I love these calls. Some Japanese companies and
Yeah.
UK stuff, all these things I probably would never find on my own. Very cool. All right. Geez, anything else anybody wants to mention or talk about?
Well, I have something that is not obscure and not not way into the weeds like you guys like to go, but I really like PayPal.
Okay.
I know you're like, okay, why?
Go on.
Maybe I'm in love with their new CEO. That might be the reality of it. But effectively what happened there is the old management team left. They brought in a new CEO, and he said, okay, I'm going to fully examine the company top to bottom, talk to customers, talk to investors, talk to our employees, find out what we're doing, what we should not be doing, what we should be doing, and then create a new plan based on all of that. And I'm really excited about what he decided to do, because PayPal is known as a payments company. So they just take a cut from the transactions that happen on their system. And what he's doing is he said, yes, we're a payments company, but actually we're a data company because we know what people buy.
Mm-hmm.
And so he's going to build an advertising platform on top of all this data, as well as making improvements to the services and the technology they're providing to their customers. And he completely rewrote the way their compensation is done and the way that they talk to investors about how the company is performing. I'm so excited about these changes that I'm actually writing my next blog about it.
Nice. I always like reading those. Do you think it's undervalued? I don't follow it closely.
I don't like to comment on whether something's undervalued or not. I would say when everyone's telling you not to buy it, that's probably the time that it's undervalued, and that's not necessarily what's happening right now.
Where without, we'll certainly plug your post whenever it comes out, and I'll distribute it and put it out to my followers. But where does maybe the short version of the payments sort of ecosystem that it lives in, with Zelle and everybody Venmoing now, like what are the threats there? It's kind of where my mind goes.
That's the biggest challenge, actually, is that industry is so big that pretty much everyone is a competitor. Everything from Apple Pay, Google Pay, credit cards, Zelle, even just cash. My view is right now that industry is growing fast enough that there's still room for everybody. And then the question is what happens when that growth stops, and when does that going to stop? When it stops, I don't think anyone really knows, because like the entire world is becoming more digital over time. So there's always going to be some new market to get into, even with cash transactions slowly becoming less common in different places.
Mm-hmm.
What PayPal has done with some of these competitors is come up with a service that's so good that those competitors partner with them to use it. And that's something that's starting to happen too, that I think is very interesting and a little bit unexpected, but I would also attribute to new management having a really good handle on what they need to be doing.
Cool. Interesting.
Well, like I said, that's not as fun as the Japanese companies or the obscure UK stuff. I'm not as much of a deep dive value style person as everybody else here is.
No, but you give a good, everybody here and anybody that's listening to read your blog on what's the Wagner Road Capital Management. I mean, you give these good 30,000 foot views of an industry, coupled with some, kind of micro things on individual companies. I think it's good. I mean, there's a risk that I go far too deep. I mean, that's always, I always feel like there's that next thing that I'm missing or some detail somewhere that I need to pull out. And so I think it's good, and you usually tell me to buy something for a few years, and it takes me a while to have it sink in. And
well,
my Copart.
I think my view on that is,
Bye, Helen.
I think if there's some detail that I missed in some financial report that would make the difference about whether I invest or not, I shouldn't even be investing in the first place if something that small is going to make a difference.
Mhm.
If that small piece of information would make the difference whether I make an investment, I should just move on and find something that's easier. But that's just my perspective on it. And maybe it's laziness. I don't know.
Well, you get the big stuff right, and I mean, I'm coming from the world of banking, which you're looking at individual companies down to the line item, and then owning banks themselves, which you really need to know if there's
Yeah.
anything going on, sort of in the micro. But yeah, I mean, and clearly, I mean, you've done well. It works for you. So, but I think it's a good balance too. I mean, just to be reminded, okay, like 30,000 foot view, just make sure you've got the right handle of what's going on in an industry from a macro perspective, but without being a macro investor. Like I wouldn't consider you a macro investor. I don't think you consider yourself that either.
No, and the term macro is a little bit misunderstood for investors, I think. That's saying I'm investing because I'm anticipating that interest rates will change.
Right.
And
Right.
none of us are doing that. I think that's an entirely different type of investing that doesn't really make sense if you're doing research on individual companies and then you decide you're going to buy it because you think interest rates will change.
Right. Right. Yeah.
I don't know. That's my pick of the month, I guess. Would be PayPal, and that's a
Okay.
story that's been ongoing, and I had enough people bother me to actually write about one individual company that I decided, fine, I'm going to do that.
Good. Good.
instead of quick overviews on industries where I don't tell you which one I like the best. Well, okay, I'm going to change that this time.
It was pretty clear. I think it was the last one. Enphase was your top pick, or at least most interesting.
Most interesting, and when you looked at the numbers, it was the most obvious. I mean, the numbers, the market position. But I like to leave things open ended so that I'm not introducing too much bias.
Gotcha. Yeah. Yeah.